Hi guys, welcome to Learn Trade and Earn Forex. I am Tim Ambrose, your host and surest plug to consistent profiting in the Forex market. Just in case you're new to my channel, do well to hit the subscribe button and notification bell below so as to be the first to get notified when I upload another educational and amazing video. Also, if you're new to Forex, please see my previous videos for a step-by-step approach to becoming a pro in this market. You can also get every information you need, like the broker I use, my trade setup group chat, and how you can get in touch with me in the description area below. Thank you.
Hello, welcome back guys. This is Tim Ambrose here, and today I want to quickly talk to us about the trend lines. A lot of persons have neglected the power of the trend lines, and as a result of that, they are not profitable traders. Now, there is a popular saying in the Forex market, which is, the trend is your friend. Don't go against the trend. The trend is your friend. But many times you see people going against the trend, and they tend to lose money. So, and here in Learn Trade and Earn Forex, we are not interested in your losses. We don't want you to lose money. We are interested in you making profits. So today, I'll quickly talk to us about the trend lines. Now, trend lines are diagonal lines used to connect the support and resistance points in the market. Trend lines are diagonal lines used to connect the support and resistance points in a trending market. Two, they are used to identify possible areas of retracement and reversals in the market. So the trend lines are diagonal lines used to connect the support and resistance points in the trending market. And also, they are used to identify possible areas of retracement and reversals in the market. That's the trend lines. How to draw a trend line correctly? In order to draw a correct trend line, we need to find two support points, two points of swings, reversals or retracements on a trend and connect them. So this is what I mean here. See these points of swing. So we've got 2 points. Connect these 2 points. Find that the market will tend to respect the trend. So that is what I mean, like saying we will find 2 points of swings, reversal or retracements on a trend and connect them. So let's head quickly to the chart and do a little bit of a practical explanation. So before your trend line could be said, before you can say your trend line is correct, you need a minimum of 2 points. 2 points of swing. You need a minimum of 2 points of swing before you can say your trend line is correct. Now, from what we have here, let's see if we can get a neat one. Look at this point. Yes, this is 1 point, and this is another point. So let's connect them using the trend line. Using the trend line, let's connect those 2 points using the trend line. Okay, using the trend line, this is what we have. Using the trend line, this is what we have. So the market has been on an uptrend for quite some time. So There are more than one trend on a chart. For instance, I can decide to connect these two here. Let me highlight that. Let me highlight that one. Look at this. This is, let me say this is my point 1 and this is my point 2. So after connecting these 2 points, okay, you can see price went up, retraced, bounced on the trend line. What happened? Went up again, and at this point you can see that. So you can find more than one trend line on a chart. It all depends on what you are seeing from that chart. It all depends. Let me take out this first one here. It all depends on what you're seeing from on that chart. It's a function of what you're seeing. Now, after carefully identifying a trend, we can trade that trend. The trend is your friend. So just follow the trend and you make your profits. Now, after you've identified 2 points you're interested in making, you drawing your trend line, point 1 and point 2. Now, the third time the market, or the third time price comes to that point, so you can see price got to this point the third time. What happened? We would have looked for buy opportunity. Look for opportunity to go long on this trade. So what is the opportunity we would have taken here? Let's see what we have there. Let's see what we have there. Let's see what we have there. Zoom in a bit. Okay. So from the third point there, this is our first point, our initial point. Remember this guy, this is the second one, and this is the third point. So price bounced on the trend line the third time, and we have what looks like a hammer here. This red candle does not really look much like a hammer because of the long thread we have above. Yes, does not really look much like a hammer. Okay, so let's go to the lower time frame and see what we have there. So first of all, I would like to highlight that point. This area, I would like to highlight that area so I can go back to my 1 hour time frame and see what happened at that point. So once you've identified your area of once you've identified the trend, it is advisable to go to a lower time frame to execute your trade. Look for entry opportunities from the trade. So now from the higher time frame, this is the point where price touched the trend line. So from the 1 hour time frame, we would have not seen that this is the best time to long this market. So look here, we have a bullish engulfing bar, strong momentum engulfed the seller is a sell candle, which is a clear indication that the buyers are now in charge of the market. So we would have initiated a buy at the close of this bullish candle, and our stop loss would have been placed just right here. So but our take profit will be determined from the higher time frame. We won't determine the take profit from the lower time frame, but from the higher time frame. So here you can see clearly we have a trend. This is an uptrend. So this is the entry point, this is the stop loss. So our take profit to be determined from this daily time frame. Like you all know, I don't like going for too something that will take me too long to achieve. I go for something that is reasonable, that can easily be achieved. Now here we have this is the stop loss, and this is the I prefer to use this one as my take profit. So let's check the risk to reward ratio. So for the stop loss we have 60.9 pips, and for the take profit we have 224 pips, which is up to one. This is over 1:3.5 if I'm not mistaken. That should be over 1:3.5. Be over 1:3.5 if I'm not mistaken. So let's check it again. Okay. So this here we have 58 or so, and here we have 235. So that should be about 1:3.5 or 1:4. So the risk to reward ratio is really okay. It's nice. You can easily achieve that. While there are some persons who would have placed their take profit just here, and I believe this should be 1:2 or 1:2.5. Depends on you. Don't go for higher risk to reward ratio if you've not learned how to if you've not successfully trained yourself to getting such profits from the demo account. Don't try it on the live account. You could get scared and close the trade before it gets to your take profit. Why there are some persons who would have placed theirs here, and some other person may have placed theirs here. So you see, this is way too far. This is way too far. Let's see what have you. This is 579, and this here is let's check that properly. Let's check that properly. And here we have 59.5. Let's say 60. So this is over 1:9. 1:9.5. You can see this is a daily time frame. So it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Should be over. It should be up to. This is from the 4th of November, and the take profit was 18th of December. So this is over a month. It took over a month for this trade for it to hit their take profits. You may not be able to do the trade that. No, not everybody can do that. Okay, so let's go back to the trend line, which is what we are interested in today. So let's look for more opportunities to explain the trend line clearly, because I want you guys to be profitable in the Forex market. Now here you can see what we have here. Let's see, this is the first point, and this is the second point. Now price approached it the third time. Price approached it here the third time. Now note, price may not, or price will not at all time touch your trend line. It won't. There are times it will just move close to it and get away. Few pips closer to it, it will touch it. So but that does not make that point invalid. No, it is as valid as every other point. It is as valid as every other point. So as price approach this point, what would you have done as a good trader? Like I said in the previous one, I said highlight, go to your lower time frame. That's September. Let's see what we have there. After highlighting, go to your lower time frame and see, look for entry opportunities. Don't just execute, look for comfortable entry opportunities. Because it is approaching your trend line, it's not a good sign of what's it called, of executing a trade. Respect the trend, look for good entry opportunities. Okay, now you can see this guy is the highest we have here, and this guy approached the trend line. You can see approached the trend line but did not get to the trend line. So here you would have seen that we have a candle patterns that indicate reversals at this point. First of all, we had the shooting star, which is a good sign of reversal. Also, we have the hanging man, which is a good sign of reversal. And also, we had the bearish engulfing bar, which is also a good sign of reversal. So, as a good trader, what I have done, I would have executed the trade either at this point. If I missed this entry, I would have taken it at this point, and my stop loss would be just at the trend line. That's how I would have done it. So if I did not miss these other entries, then I would have executed it just at this point. After the shooting star, I would have executed it just at this point. And also, like I said from the previous explanation we did, so my take profit would have been from the daily time frame. Take profit, I would have gotten that from the daily time frame, and I would have preferred to use this point here. Let's see what we have here. Let me explain why I would have used there. Price got to this point, there's a structure here, fell, try to broke through the structure, came down, try to retest it and went upward. So I would have preferred to use this point as my take profit and not going for something way more than that. So let's see what we have here. So risk to reward, stop loss is 59.3 pips and the take profit is 269.2 pips. So that is way over, let's say 1:4.5 or more. So you see, the trend is your friend. Don't go against the trend is your friend. Respect the trend, you make money from the market. Ignore the trend, don't pay attention to the trend, and you end up losing money from losing money in the market. Okay, now we can have a good clear example here. Yes, see what we have here. This is our first point, this is our second point, and the third time price approached, you would have initiated a sell here. Now if the market is trending upward, then what you are looking for is a buy opportunities, nothing more. If price is trending upward, you're looking for buy opportunities. Now if price is trending downward, just like what we have here, then what you're looking for is sell opportunities. Don't go against this rule. Although there are buy opportunities when price is trending downward, but I prefer you go for only the sell opportunities. to avoid the risk of blowing up your account. Okay, so this is it here. You would have initiated the trade here. I would have gone to a lower time frame to initiate this trade, but will this be able to show us a lower time frame? This is 27 June 2018. So let's see if it will show us this stuff on the lower time frame. Okay, 27 June 2018. Okay, let's see if price, if we can get to that point. Okay, it did not. Just change to the 4 hours time frame, and let's see if we'll be permitted to get to that point. Let's see if we'll be permitted to get to that point. Okay, so this is the 4 hours time frame. Okay. So from the 4 hours time frame, you see, this is where we would have initiated this trade. You can see we have a clear hanging man. Look at that candle properly. This is a hanging man. A sign of bearish reversal. If you don't know how to identify these guys, then I would advise you go to see my previous video on candle patterns, so you can understand that clearly. So this is my entry point and this is my stop loss. I prefer here as my stop loss, a little bit above the entry points, and my take profit I like to be reasonable. So let's go to the daily time frame and see where we can use as our take profit. So from the daily time frame, I would prefer to use this guy here. These are points, the points of hindrance. So there's a support at just at this point, so I prefer to use this guy here. So let's see the risk to reward ratio. The stop loss is just 30.7 pips, while the take profit is 277 pips. So that is way over. That is 1:9, if I'm not mistaken, or more. So you can see that's a good risk to reward ratio. A very good risk to reward ratio. That is very nice. Okay, one other thing I want us to know about the trend line before we call it for end class. Now look at this. After drawing the trend line, okay, this is our area of interest, point 1, and then point 2. Price bounced at point 3. Price tested point 4. This is point 5. Remember, I said it does not have to touch it for it to be proved that that is the point. And this is point 6. So this is 1, 2, 3, 4, 5, 6. Now, price broke through the trend line. Whenever price breaks through your trend line, a good confirmation, there will always be retests. Not at all times, but many times there's always a retest. So when price breaks through the trend line, it is not a clear confirmation that price has broken, it could come back below the trend line. So, but wait for a retest. So, as price comes down, bounces off the trend line and shoots up, that's a good sign of entry. So, how would I have traded this? If I would have traded this market if I was in the market. So, look at this point. Here you can see we have a bullish engulfing bar, which is a clear indication of bullish momentum. So this is red, this bull engulfed it. So I put my stop loss just at this point, and my take profit can be that far. This is for the daily time frame. Now for a much lower time frame, remember I told you guys I like looking for structures on the higher time frame, then good entry points on my lower time frame. Okay, now see what we have here. From the daily time frame, this was where the trade was executed. Now, but from the 4 hours time frame, I would have executed my trade at this point. Why? This is a bullish momentum engulfed this candle. So engulfed this guy here, and this guy looks somewhat like a hammer. So the clear sign that it's a buyer's market. It's a buyer's market. So what happened? You can see price went up before the next retracement. So let's see check the risk to reward ratio. Here we have 34.5 pips as a stop loss, and the take profit is 299.5. That is where 1:8. So you see why I love respecting the trend. Don't go against the trend if you don't want to lose money in the market. The trend is your friend. Respect the trend, it will respect you. Disrespect the trend, it will blow off your account. As simple as that. Don't go against the trend. Okay. So here also you can see what we have here. This is the first point, this is the second point. Let me quickly highlight that for you to see. So this is the first point, this is the second point, and this is the third point. So at the third point of bounce, you would have gone to a lower time frame to execute this trade. Now, if you follow the trend, you can hold it for a long time. You can hold it for days, weeks, even months. That's if you follow the trend. You can hold it that long. Respect the trend to respect it. Now, also, just because we have a trend down here does not mean we should neglect what is happening there. You can see what we have here, see clearly what we have here. Okay, so this is the first point of bounce, and this is the second point. This is 1, this is 2, and look at this place, this is 3. So most persons, after they had drawn the first one, they tend to neglect what is happening in the okay, here we have this is 4, and then here you can see we have 5. Here you can see we have 6. Respect the trend, don't go against it, respect it. The trend is your friend. Okay, so if you respect the trend, you can enter multiple trades. What do I mean? This is our first point of bounce, second point of bounce, and this is the third point. You would have initiated your trade at this point. This is the tweezers bottom. This is the red and the blue tweezers bottom. So you would have initiated the trade there, and the stop loss is just right at this point. allow the trade run. Now also price gets to this structure here. You can see here we have a support, first point, second point, third point, fourth point. That's a support. So as price approaches that point, what would you have done? You would have entered more buy opportunity at this point. So remember, you initiated one here. This is the second one. Allow it run. And as price pulls back again, remember this is another trend, first point, second point. We've initiated another trade around here. That is the third position you're in, getting in on this trade. Now also you have initiated another one here. This is the fourth. You can initiate another one here. This is the fifth. So if you allow these guys run, you'll be amazed at how much you make at the end of the month. Now most persons would love to take this pullback here. I don't really like that. I prefer to go for only the buy opportunities on the buy trend and only sell opportunities on the sell trend. Reason being that this guy, if not traded with caution, can blow your account. This guy can make you lose everything you've made. So I prefer going for only the buy opportunities on the buy trend and only sell opportunities on the sell trend. Okay, let's see if we can do one more before we end the class for today. Yeah, you see what we have here? See what we have here? So this is our first point, this is our second point. Price bounced off the trend line again, and before it bounced off the trend line here again before it broke it. Okay, so let's check. Let's say we entered at this point here, the first one, and entered here also the second one. At the structure. Now, because you've drawn the trend line does not mean you should neglect the support and resistance. Don't do that. You'll lose money if you do that. Price will not at all time get to your trend line because there could be a support or a resistance at such points. So let's say you took this trade here and you closed just somewhere around here. That's 284 pips. Then the second one here, you closed here 231 pips. The third one we took here and you closed here 144 pips. So you see how much you would have made if you paid attention to the support and if you paid attention to the trend line. So if you are on the buy trend and you pay attention only to the buy opportunities, you find that you make more money. So you don't go for these pullbacks because this pullback could be deceptive. And the pullbacks could make you lose. The pullbacks could make you lose more than you make from the market. Okay, so having explained all this, so let's go to my trend line checklist, and that'll be the end for this class. So for my checklist, how I use the trend line. Number one, on the buy trend, I go for only buy opportunities. Let's go back to the chart. This is a buy trend. I look for only buy opportunities to join the buy. I don't go for these pullbacks. It could be deceptive. I don't go for them. They could be deceptive. Now, number two, on the sell trend, I go for only sell opportunities. I don't go for buy opportunities. Let's look for a sell trend. Let's look for a clear sell trend and explain that guy. Yeah. So this is a sell trend, and then I'll go for only sell opportunity to join the sell. I don't go for these pullbacks upward. No, I don't do that. These guys could be deceptive. I am interested in only the sell opportunities. I am interested in only the sell opportunities. For instance, what I mean by those guys could be deceptive. Look at this. See the movement here. The pullbacks, not that much. Getting to this point, okay, expecting price to pull back to this trend. But what happened instead? Price did what? Fell. So possibly you might have set your stop loss and take profit. You just executed this trade and go later you come and check what happened. You would have come and see big loss. Why there are some persons who don't use stop loss, which is bad. So you have come and possibly your account might have wiped out. So I am not interested in the pullbacks. I'm not interested. I'm only interested in this trend. I go for only the trend. I'm not interested in the pullbacks. And when you begin to apply that, it would benefit you. You'll be amazed at how much you make from the market. 3. Don't neglect the horizontal support and resistance when it's in the trend line. Please, very, very important. Don't make that mistake. Don't make that mistake. Don't make that mistake. Don't make that mistake. Now, look at these guys. So, you can see the structures we have here. Let's say you did not pay attention to this resistance here. Sorry, this support price was above it. Look at, you might be expecting this price to drop down to this point. What happened? It bounced just at this point. Why? Because of the support. So pay attention to the horizontal support and resistance. Pay attention to them. They are very, very important. Look at what we have here too. You can see you may have been expecting price to drop to this trend line, but what happened? It bounced over this point. Why? Support is here. You can see clear confirmation so that the time it bounced back at this point. So if you pay attention to the support and resistance, the horizontal support and resistance when it's in the trend line, you'll be amazed at how much you would also pull from the market. Now the 4th on my checklist is I look for structures on the higher time frame, then execute on the lower time frame. This I have explained that. So here you can see as price approached the trend line for the 3rd time at this point, what happened? I would have gone to the lower time frame and look for entry opportunity. I will not execute that trade from the higher time frame. No, I don't do that. I go to my lower time frame and look for entry opportunities. So guys, that is it for today. I hope you enjoyed the lecture. Please drop your comments in the comment section, and if the questions you want to ask and you want me to explain better, please drop your questions in the comment section and I'll do justice to them. If need be, I'll make a video on that for better understanding. God bless you. Just in case you're new to my channel, please do well to hit the subscribe button and the notification bell so you can be the first to get notified when I post another amazing and educational video. And if you're new to the Forex market, please go back to my previous videos so you can get a step-by-step information on how to become a profitable trader in the Forex market. Till I come your way next time, I am Tim Ambrose, your surest plug to consistent profiting in the Forex market. God bless you.